Hello everybody, this is Toni Turner and welcome to the market now as of Friday, February 3rd at about 3:30 p.m. Eastern. Well, the gauge of global stocks slumped while U.S. Treasury yields and the dollar shot higher today after a surprisingly strong U.S. jobs report kindled concerns the Federal Reserve may need to stay aggressive in its rate hike path in order to tame inflation. Crude prices also felt pressure again this week as the data showed another large build in U.S. inventories of crude and fuel products. Well, the good news with that is gas prices go down, right? We hope. Okay, and on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to look first at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $411.91, or about 41.19 on the S&P 500 itself. Now, here's the good news. The SPY is trading at 19% above the SPY's October 13 low right here that I'm marked for you. That gapped down and opened at $348. Almost everything that day did gap down and then shoot higher, almost every asset, many at least. And so we're 20% higher now, or 19% higher now than we were with that October low. So we bounced up 19%, and that is definitely a positive note. The benchmark has made a very positive climb here from those October lows. You can see when it gapped down here, it immediately moved up on that day and closed higher that day. Then the SPY started moving up here. It broke through the red line, the 20-day moving average, continued higher, broke through the green line, the 50-day moving average. Of course, right now, at this point, these lines were reversed. But at any rate, it did break up and above the 50-day moving average. Then it fell back down. It came back down here to about 370, then rose up again. At this point, the 20-day crossed over the 50-day, which is a bullish sign. The SPY kept going, and it went up in November and December, actually punctured that 200-day moving average, which it hadn't done since last summer, last August. So it definitely moved up and punched through that. It went up to 410 two times, but could not go any higher than that. And when you see these two in a row that it can't go higher than, that's definitely important. Then the SPY fell down, as you may remember, into December, came back down here to the 375 zone, consolidated into the first week of January, and now in the last few weeks of January, moved up and over again, over the 20-day, over the 50-day, even managed in the last 2 weeks to move up over the 200-day moving average, the black line. Now, from there, it has rocked up almost in a perpendicular move here. It's positive when the market starts the year on a note like this, on a nice little uptrend in January. However, I'm going to say that in the last 3 days or so, it's pumped up really fast, and I'm kind of wary here. I don't want to buy high and sell low. I want to buy a little lower and then sell higher. So I'm kind of like, okay, that's good. Took some profits, and now I'm going to wait and see what happens. The SPY's next challenge from where it is now is right up at 418. So today it went up to, or today and yesterday, Thursday, it went up to 415 and change. And if we look back, we can see that there's resistance from there, and I don't know if I can draw a line this straight, but anyway, we'll try. From back in August, we did pretty well there. So it's now at about it's at the resistance line of 418, which is right here. Then we have a high on top of that. We've got 432 August highs. 432 would be the next level of resistance after that. And if you think price resistance doesn't matter, I mean, look back at all the times prices hit a prior high and then had to back off. So it does matter. At least in the short term, we know that these price resistance areas do matter. We also know that price support matters. As we've seen it catch here at 375 and so forth, and the moving averages act as support. So right now we do have support for the SPY right down here where the 50-day looks like it wants to cross above the 200-day. That is a positive sign if it can pull it off. So we've got the 200-day moving average at 394 and the 50-day moving average at 394.69 or 70. So this area here, the 395 area, we'll call it, that is nice looking moving average price support. And if we look left on the chart, we'll see that it was also price support is there as well. So let's see now what happens in the next coming week. We do have more earnings coming out, and we'll want to be careful here. Many stocks are overbought right now in the short term. They're overbought. They popped higher. So please, please trade what you see, not what you think is going to happen. The next chart we're going to look at today is the daily chart of the Invesco QQQ, symbol QQQ. This, of course, represents the Nasdaq 100, a major index in the stock market, with top holdings including a lot of tech stocks like Apple, Amazon, Microsoft, Alphabet, Tesla, that whole group. Now, when I captured this chart today, the QQQ was trading at $306.16. And more good news, just like for the SPY. This is about 20% above. Here's the October 13 lows. The Qs today are trading about 20% above the October lows, so that's a good thing. The October lows came in at 255. At least at the moment, it's bullish, and we're going to take it. But we'll take the bullish, but let's take it a little slow and easy here. These highs have been made. What we don't want to do here is get caught in what we call a bull trap. The bulls are coming in, they're buying, and then all of a sudden the bears say, yeah, well, this is getting overdone. Let's look at the RSI here. Here's the 14-day RSI, and it went up over the 70 line, meaning it's overbought in the short term, came back down today to 67. But whenever you see the RSI get up this high, usually not within the next day or two, but usually we do see somewhat of a pullback or a move down. And we can look at other times this has happened, and we can see, like back in July and August, over here, we can see the RSI is high, and we know that at some point, it's not an instant thing, but it can cause a little bit of selling to come into the market. So let's be careful here. And we know again too, then let's look real quick here too, from the October lows, again at about at about $255, the QQQs tried to rally here, came back up, made a higher low. We always appreciate that. Came in and made a higher low at 260. And we know from looking at long-term charts that 260 on the QQQ has been prior support in recent years, so that's a good thing. Then it moved above the moving averages up here to about 290, moved above the 50-day, the 20-day, the 20 moved over the 50, the Qs moved up here to this area here, up to about right here in December, moved up to 296.65, call it 297 on December 13th, but it could not hold here. Dipped back down to this 260 zone, so there it is again. So watching support and resistance can be very important for your trading, and that's why I go into it so much. So it held 260, that's a positive note, touched it 3 times actually, and then moved up again. The 20-day finally inverted and moved up over the 50. The 50-day moving average is rising here, which is positive. The 200-day moving average here in the last week was coming down overhead, but price managed to jump up above it. And again, as I said, closing today, or not closing today, but when I captured this chart near the close at $306.16. Let's be careful here. Again, when price goes straight up, the shorts tend to come in and pound it for a while to make their money. They fade the trade, as we say, meaning in this case to take it lower. So while yes, buying is maybe a real good idea, let's back off a little bit and let a little air out of this before we do anything too wild and woolly. Today, the QQQ opened at $304.94. It ran up to $312.39. And again, we can see now the air coming out a little bit here with it back down toward the close at $306. So we might, again, see a little of the air coming out of this. And we do have still more earnings coming ahead next week. So let's see if next week the Qs can stay above the 200-day moving average or not. We do know there's price support down below and price support all the way through this zone. So again, please be careful and consider using protective stops on all of your trades. Our final chart today is one we've been in before, or certainly looked at before. And I want to look at it again. This is the Global X Hydrogen ETF, symbol HYDR. It has 25 holdings. It's a global fund. Some of them you've heard of, some of them you haven't. There are, again, 25 holdings. Top holdings include Bloom Energy, Plug Power, Ballard Power, AFC Energy, and PowerCell. Now, this is a fairly new exchange-traded fund. It was initiated in July of 2021, and it made an all-time high, but it's not that old, but it made an all-time high of $29.23 in November of 2021, and of course you can't see that on this chart. So over the last year or so of its being open, it gradually fell with the rest of the market and finally ended up down here at, the October 13th low. It gapped down to $9.64, and from there it started higher. It moved up over the 20-day moving average, the 50-day. They're inverted, of course, at that point. Moved up and then started consolidating, trading in a range here, and trading at 1275, right at this kind of midpoint, when it looked like it might go higher and break out, but it could not. So it continued trading in a range, then broke down here to about 1050, but it was a higher low, okay? And then started up in January, moving higher here. It moved up over the 20-day, the 50-day, and then moved up back down, finally crossed over the 200-day moving average in the past week, and moved up to Thursday's high was $14.46. That is price resistance from last September. Can I do this? So this price resistance matters, guys. You got to see it. Support matters and resistance matters. So just be aware of it. So, all right, so today when I captured this chart, the HYDR was trading at $13.83. In the coming week, if the HYDR can stay above the 200-day moving average, and that's coming in now at $12.93, if it can stay above that line, and if the market behaves. Now, if the market starts down again on Monday, and the HYDR is starting down, I'm not probably going to touch it until I see it come into some support and see if it holds. So if it can stay above the 200-day moving average, and again, if the market behaves and isn't heading south, I will add a small position to my trading portfolio with my initial stop down here just below the 50-day moving average at $12.20. My druthers would be that it does come down and then sit on the 200-day moving average at $12.93 or so. That is where I would like to get in. I don't particularly want to get in much higher than that, but if that's the case of waiting and looking. But above the 200-day is still good. Now, if and when it rises above Thursday's high, which again was a high, a pivot point in September. If it rises above that at 12.50, if it moves above that, I will add a little more to my position, and by then my stop will be a trailing stop. So you may want to keep an eye on the HYDR in the coming week. Now, if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You can choose from 10 different online trainings, like our very popular flagship program, 7 Steps to Successful Trading. Plus, you're going to find easy-to-learn strategies that target swing trading, very popular program, trend trading, which I personally love, how to read charts, great for novices, 3 winning setups, another really good one, a short one, a fast one. These are both fast and good. And how to bottom fish like a pro, which is really something we all need to know right now. So think about starting the new year by learning how to increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. Here's the link, or click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.